What's going on, everyone? It is Paul, the 920 trader with 920 Trading and Trading Decoded. We're going to talk about a very, very fun subject today, one that is often talked about it's talked about in our trading community all the time. And I'm sure if you've been around traders long enough, you will understand exactly what we're talking about. What are we talking about today? Greed. What is greed? You hear greed, and what does it do? It conjures up these images of Scrooge McDuck, sitting on, piles of money and piles of gold. It's greed. It's greed. It's nasty. It's ugly. It's all of these things. But what is greed? What really is greed? Well, let's see. Let's see what the definitions of greed are. One is greed is an intense desire for material gain or social status that goes beyond what is needed or fair. Really goes beyond what is needed or fair. Okay, number one, what's needed? That's kind of subjective. What is needed and what's fair? Who gets to determine what either one of these things are? It kind of reminds me, I don't know if you guys remember John Paul Stevens, former United States Supreme Court judge. And he was talking about the subject of all things pornography. He said, I don't know how to define pornography, but I'll know it when I see it. And that I think that's the subjectivity of both of these subjects, whether it is what he was talking about specifically or about greed. And again, it's subjective. The economist, I don't know if you know the economist, his name is Milton Friedman. He was a brilliant economist. He won a Nobel Prize, And he famously said, the world runs on individual pursuing their separate interests. So basically what he is saying is people run on their own rational self-interest. And again, you use that, and that's my word. My word is rational self-interest. Is there a difference between greed and rational self-interest? Again, who gets to determine what is enough and who gets to determine what is fair? In the overall big scheme of things, I don't know how to define that. I mean, what is enough for one person is certainly not enough for another person. And it goes back and forth and back and forth. So how do we define greed relative to trading? I mean, that's ultimately what this is all about. This is a trading newsletter and this is a trading video. So how do we define greed relative to trading? Well, I think it's real simple. You guys know me, you know that I'm a rules guy. As long as it falls within your specific rules for both entries and exits, I don't think there is such a thing as greed. As a matter of fact, one of the people in our group, DDawg, that's his name, DDawg, he argues that greed is a moral judgment, and because the market has no morals, greed doesn't exist. Okay, so in the context of the market, the market is more than willing to take all the money that you are willing to give to it. Does that make the market greedy? Does that make the big boys greedy? Does that make the big banks and the financial institutions, big hedge funds, big institutional traders, does that make those people greedy because they are willing to extract as much as they can extract out of the market? I don't know. Again, it's a subjective thing. But for retail traders, I think it's incumbent upon us to understand. And again, this is where I'm coming from. This is my opinion on greed. I don't think greed really exists unless you break your rules. So what does greed look like? Well, number one is over trading. Taking way too many trades. Your desire for these really, really quick profits when your edge doesn't present itself. I think that's greed. Another thing is ignoring stop losses. You get into that trade and, it hits your stop loss. And then you get that feeling in the back of your head, you know what? I think this is going to be all right. It hit my stop, but at the same time, I'm just going to go ahead and I'm going to let this thing run just a little bit longer. And that kind of leads us to the next thing, holding on to those losing trades. When you're supposed to stop out of that trade. What are you supposed to, again, the first thing that you are ever supposed to do before you put on that trade, predefine that risk. You can't grow your capital unless you first protect your capital. So predefine that risk. Holding on to losing trades is a good way to lose your money. You will lose it very, very quickly if you don't predefine your risk and you hold on to losing trades. The next thing is, and we see it regularly, folks, we get into maybe a trend or a really fast trade or a fast play is happening. And let's say you missed your entrance on that play. So what do? Well, the smart person says, you know what? Trading is like a bus. I missed the bus. I'm going to wait for another bus because another bus is right around the corner. It's trading, folks. We're going to get more trades. That's just the reality. So that's what a smart person or a wise trader is supposed to do. But what a lot of people do, if they miss that trade and it's going in their desired direction, what they'll do is they'll jump into that trade. So I liken trading both to a bus and a train, folks. So the worst thing you could possibly do is try to jump onto that moving bullet train. I mean, every now and again, you might get easy. The doors swing open, you get in, and you do well on it. You know you're breaking your rules, but that kind of, you're breaking your rules. Why do that? More times than not, folks, you get into that trade after it's already going, and guess what happens? You get a pullback, you close out of the trade, and it's a losing trade. And then you have a nice little talking with yourself, and you say, why did I do that? I'm not supposed to do that. We don't chase trades. We don't chase trades at all. We're not dogs. We don't eat out of a bowl on the floor on all fours wagging our tail, folks. Don't chase trades. So how do we manage this whole thing? Number one, as far as over trading, a daily trade limit. You can say, I am going to take 3 trades a day or 4 trades, whatever that is. Set a specific number of trades that you are willing to take. Now, remember this, your edge must present itself. So if your edge doesn't present itself, guess what you get to do all day, folks? That's right, you sit on your hands. You don't break your rules to put on a trade because you're bored. Bad thing to do. The second thing, have a trading journal. Always have a trading journal. The trading journal that I share with my folks, it has everything about the trade. It has the trade number, the position size, the time you got in, the time you got out, the lot size. I mean, what's your position size? How many contracts? How many contracts are you trading? What was the reason for getting in? Did you get in? Did you follow your rules to get in? Did you follow your rules to get out? And again, it has to be very, very specific. What was your heart rate? This is another thing that we track, folks. What was your heart rate before, during, and after the trade? Because your heart rate will tell you what your general level of anxiety is. So again, track that, folks. Track it. Focus on the quality over the quantity. All crosses. And as a 9/20 trader, that's what I use. I use the 9 and 20 simple moving averages and major levels to get in and out of trades. That's what I use, folks. So I'm looking for high quality setups only. I'm not looking for those fringe setups. That's what I'm looking for, is the high quality setups. If it's not a high quality setup, I miss trades regularly because it was not in very, very selective criteria. It didn't fall within my specific boundaries for putting on a trade. People, ask me all the time, well, aren't you sad you missed it? No. If I miss a trade because my edge presents itself and I didn't put on the trade, that's one thing. But if a trade takes off and I'm not in it because my edge wasn't present, I don't care. And again, that's all about patience, folks. Now, number 2, ignoring stop loss orders. But you gotta stop, folks. Again, predefine your risk. And you're thinking, what does this have to do with greed? Well, it all goes back to the same thing, folks. If you are following your specific trading plan, there's no greed. And again, we're just going over how to follow your trading plan. So set your stop. You can use mechanical stops. You can use mental stops. I use mental stops because I don't like to get taken out by either wicks or tails. Okay, so if I hit my stop on the close of a candle, I take myself out of the trade. I can always get back into that trade. But again, folks, you must protect your capital before you can grow it. The next thing is, hey, folks, don't hold on to those losing trades. It goes to what we were just talking about. If you hit your stop, take yourself out of the trade. The worst thing that you can do is hold on to that losing trade. You don't want hope through that trade. I just hope it comes back and pick me up. We've done it. We've all done it. We get into that position, it goes against us, it blows past our stop, and then we throw our hands up and go, well, one of a couple of things happens. You either go, you know what, that's okay, I'm gonna let this thing go to zero. Or, every now and again, it comes back and it picks you up and it makes you a winner. The worst possible thing that can happen to you when you break your rules, like holding and hoping is a big one, is to end up on the winning side of a trade. It is, because that will incentivize you to do it again and again and again. Don't do that, folks. Don't hold, cut your losses. Get out of that trade. Have that mantra: cut your losses and let your winners run. It's cliche, but it's cliche for a reason. It's real, folks. Now, and again, the next thing is chasing trends. We had a situation in the market the last couple of days because there was some news that came out specifically about tariffs, about placing tariffs on Mexico, Canada, and today China. And so what happened immediately when the press secretary came out to talk about those tariffs? What happened? The market just absolutely tanked, and it tanked. And I'm looking at it, and there's folks that are jumping into this trade. I'm thinking, hey, you know what? If your edge is there, fine. If you're trying to scalp this thing on the way down, but it just kept going and going and going. Somebody asked me, they said, are you in this trade? I said, nope. They said, why? I said, well, because somebody said something. In this case, yesterday it was Trump. Today it was the press secretary. So what can happen is the press secretary can say something. This is a catalyst-driven momentum in the market. So the press secretary can say something, dump the market, and then 30 seconds later, or 5 minutes later, the press secretary can come out and say something, or Donald Trump can get back on the mic and say, well, whatever, and the market totally reverses. So I'm not really interested in now. If I'm in a trade and it goes my favor because of a catalyst, hey, that's all fine and well. But I'm not willing to take one of these catalyst-driven plays and take a position, even when my edge presents itself. I called out a few of those trades today, but again, that's my preference, folks. That is my preference. So don't chase the plays, folks. If you miss it, you miss it. Again, it's like a bus. Are we going to get $5 plays every day? No, it's not reasonable. It's just not going to happen. But you know what? On average, we get a nice trending day, like multiple $5, $6, $7, $8, $9 every 5 days. Maybe not $9, but we get nice trending days. That's on average once a week. Sometimes it happens a couple times. Sometimes it doesn't happen for 2 or 3 weeks. But on average, you can expect a nice trending day 1 out of 5 days. The next thing is focus on that risk. What's your risk? What is your potential reward? You know what you're looking for. So you need to be able to look at your potential risk and weigh it against the potential reward. And that reward must be, in my opinion, it must be greater than that potential risk. If it's not, leave it alone. Just leave it alone. Anyway, that's kind of my thing on greed, folks. It's really, really hard to define in overall terms because it is so subjective. But at the same time, from a trading standpoint, I think we can. And again, I think it all comes down to, your trading plan. What does your plan tell you to do? Does it tell you to get in? Under what specific market conditions does your plan tell you to get into a trade? That's it right there. If those specific market conditions are met, you're compelled to put on the trade. Now, at the same time, under what conditions are you supposed to or compelled to take yourself out of that trade? Whether you're hitting your stop or you're hitting your objective. Again, both of those things must be spelled out. They must be specific. We need to be very, very specific with our trading. We don't need to be generalists. We need to be just absolute snipers when it comes to both our entries and our exits, or just get better every day, folks. Ultimately, that's what we're trying to do. We're trying to get a little bit better every day. And folks, by getting just a little bit, just marginally better every single day, think about where you're going to be a month from now, 6 months from now, a year from now. You are going to look back, because again, getting better every day, you're going to look back and go, oh my goodness, look at how far I've come in a month, 6 months, or a year. But again, just focus on getting better every single day, folks. And hey, that's about it, folks. Again, it's greed. Is it Scrooge McDuck? Is it Gordon Gekko? Greed, for lack of a better word, is good. It's subjective. It's all subjective. But at the same time, from a trading standpoint, I think, and again, in my opinion, greed is doing anything outside of your trading plan. I think I just boiled it down right there. So instead of, a 10 or 15 minute talk on greed, what greed is, what I think greed is, it's simple. It's what does your trading plan tell you to do? Or is it specific? If you don't have a specific, not a general trading plan, but a specific trading plan, folks, you need to develop one. If you want one, head on over to 920trading.com. There's this trading plan over there. It's very, very specific. You can make it your own. Whatever you want to do with it, fine. It's there. It's at 920trading.com. The entire strategy is there for the entire world to see. It won't cost you anything. A little bit of your time, and then take it and then make it your own. Make some tweaks. But again, just get better every day, folks. And again, agreed. Don't know. Follow your trading plan. That's ultimately what it's all about, folks. So you guys know the thing. Hit that like button. We would always appreciate that. Share with your friends. Share with your neighbors. Trading community, friends, family, all those good folks. Anyway, hey, I hope this clears up an otherwise subjective subject. Again, it's really subjective, but at the same time, follow your plan, folks. Follow your plan. Anyway, I hope everybody's having a great day so far. Hope everybody had a good January. We're moving into February now, folks. So we got that first month out of the way. What does the second month look like for you? Hopefully, good trading, and good process, folks. Anyway, I hope everybody has a great rest of the day. And you guys know, until next time, we will see you in the markets.